Izabella, we have been talking for a little bit over an hour now, which is great. I want to keep going, but to be mindful of everyone's time, has there been anything that we haven't covered that you wanted to talk about?
Before we finish, Emil, I want to interrupt, and I want to give people a sense of what Izabella does at Financial Times. She wrote an article, I believe it was October of 2019 or a little over a year ago, about real-time gross settlement system, which is something, Emil, you and I talked about for a couple of weeks there, chips and Fedwire and CLS and all of these, these very intricate plumbing issues. And I love this quote that you wrote, Izabella, in this article. I will link it to into the description of the podcast. What you said was, it is FT Alphaville's contention that there is an intimate and underappreciated relationship between system liquidity needs and costs and the real-time gross settlement technology central banks use to provide settlement services, because these systems do not function smoothly unless commercial banks maintain sufficiently large reserves to cover payment settlement risk. And that is not something that you'll hear in the mainstream media, nor is it something that you'll hear officials and central bankers agree with. And I thought that was an absolutely brilliant observation. And in terms of our show here, I think it really highlights the benefit and the positive aspects of Alphaville, because it's not only a tremendous insight, it's a tremendous insight into something practically nobody is paying attention to, nor do they really understand why they should.
Well, it's really funny because that piece was actually picked up by, I shouldn't say which institutions, but certain institutions. I went on a little trip. I'll just say it was to Switzerland, and certain, they were like, well, we're thinking the same sort of thing, and that was so. I think the guys in the know this. I think there is no denial that the float, all that technology has done is increase the sort of the float. Like, that is what has to, payments risk is real. And even if you settle it in real time, you still have an underlying, like, because of just the way the world works, because of, people go to,
daylight overdrafts.
Oh, well, yeah, daylight overdrafts. And they're called daylight for a reason.
Yeah, but now in the globally connected system, it's not daylight everywhere at the same time, right?
Right, and that's where you get Herstat risk.
Yes.
And that relationship between Herstat risk, netting, and real time, and why we went to real time versus netting because of Herstat risk, has been underappreciated. And netting, real time seems like intuitively fantastic because you square everything off as you go. But netting also had its, both systems have their advantages and disadvantages, and gross is great, but it suffers from the fact that it has to be massively funded.
Pre-funded.
Yes. Yeah, exactly. That you didn't, netting was intuitive. Reason, like, the City of London was a netting system. I mean, the reason we have a square mile is because of this day-to-day settlement squaring that had to happen in the City of London, right? The reason they did that was because it was an efficiency. Like, you only, you netted it off, and you only had to actually settle things on the margin, and that was an efficiency. Now, it created other risks, and there's been a consensus in this area that real time takes away these risks, but it replaces them with collateral risk. That's my point, because it has to be pre-funded. Now, if you pre-fund and you're using treasuries, and say, like, in the EU, you're using Greek bonds or whatever, you're just transferring the risk to the collateral that is pre-funding the system. Do you see what I mean?
Absolutely. And you're putting strain on the desire or the need and desire to hold collateral, and which types of collateral, which creates other knock-on implications, which, as you said, people think real-time gross settlement is the way to go. Therefore, we stop even investigating any downside to it. When it just moves the bogey someplace else. You haven't eliminated the problem, you've changed it.
And the reality is that massive balance sheet that we've created at the central bank is a function of how we underappreciated the scale of funding that we need to maintain that real-time settlement system, in my opinion. And that's why I don't think we can ever go back to zero, or to a very small and nimble balance sheet, because that's simply the cost of it's. I did a story comparing it to Prudential. So prudential sort of risk management post-coronavirus, but with supply chains. It's like we were operating a just-in-time economy and we had no reserves, right? So when the crisis happened, nobody had enough, face masks, food, whatever, supermarkets had 3 days worth, whatever. And now just like after the financial crisis, we were like, oh my God, that's obviously not enough. We're going to have to have a lot more reserve in the system just in case a crisis like this happens. But nobody appreciates that reserves cost money, because reserves are a missed opportunity, right? Because they either go off or they won't be sold. Why hoard a load of stuff when you don't need to? It's a cost. And I think what we did post-financial crisis is that we buffered up the financial system, and all this float was like a claim on a theoretical liquid resources. But if the material liquid equivalents, aka food, whatever, is not existing in the real economy, then there's a mismatch, because actually finance is just a reflection of the real economy. So
it's supposed to be. It's supposed to be.
As a really convoluted way of saying that, I think these reserves in real-time settlement are never going to match the reality on the ground, because if you're trading, toilet paper, you can't just suddenly square a shortage off. Like we were saying about, it wasn't with you, someone else. We were talking about the microchip shortage. It's just not something that can be resolved overnight.
Right.
Because it takes technical skills. You can't just develop a chip manufacturer overnight. So,
and I would argue it's the same thing even in the financial space, that reserves have a limited function that doesn't necessarily lead to credit creation. For example, yes. A bank that is balance sheet constrained may have all the reserves it ever needs, but that doesn't mean it will start making loans, because it has other factors that it needs to pay attention to. And in many ways, as you just pointed out, the creation of reserves has actually been an imposition on its balance sheet, as we're seeing now with the SLR cliff, that maybe that reserves have actually a downside that hinder credit creation. So it's not, it's not in a one-to-one where we think, the Fed creates a bunch of reserves that eliminates settlement risk in these payment networks, but it may create problems or may not solve problems in the larger, wider financial system, which is how credit and money gets out and distributed to the rest of the system. And I think that's why I loved your article, because you're pointing out that, okay, everybody thinks reserves, maybe if you don't think it's a uniformly or homogeneously positive thing, everybody thinks it's at least neutral, right?
Yes.
There's no downside, right? The Fed prints money, it's reserves. Who wouldn't want a bunch of reserves sitting on their balance sheet? And no, wait a minute. There might be some downside to it here that nobody wants to talk about, because why would we want to talk about the downside of the Fed creating reserves?
Reserves have to be funded. Everything has to be funded by something. And I guess that's my criticism of Gosbank as well, which is that, when we're talking about sort of CBDCs and things like that, we're only focused on one side of the balance sheet, which is the central bank liabilities, right? But nobody's talking about, the asset side. And those assets have to be representative of productive value. And if you have the entire sort of banking system being undercut by central bank money, and you get a huge transfer of liquid deposits from banks over to the central bank, that increases the float, which will have to be back, to maintain the liquidity, to be able to service that liquidity. The central bank will have to start making active investments that create seniorage at a better rate than it's giving out. Otherwise there will be a negative equity situation on the balance sheet. And when you get the central bank making these decisions about where they allocate that liquidity to, that is not a good thing. That
always leads to problems.
State banking. It's just state banking under a different name.
Right. It's going the wrong direction, because ideally the commercial banking sector is what we want making intermediation decisions. That's what it's for. Even in just primary markets, we want dealers to be able to say, this company wants to sell its bonds. We believe that these bonds are sellable. We don't want central banks making those decisions, because they're not equipped to make those decisions. And so the more that
BOE like announcing it has a green agenda, or forwarding like, fine, I get that it's, it cares about the environment and wants to make a change. And I used to think this was a good idea, actually. But what I worry about is, I think maybe the market is more intelligent. And I worry with the green thing because I'm not convinced we know what technology is going to actually get us out of this crisis. And I'm not sure that subsidies, which is what this would be effectively equated to, are going to help innovation. Because if you are getting subsidies to create what might turn out to be not the solution that we're looking for, then you're just like, you're actually impeding the innovation that we need.
Yeah, crowding it out.
That's my instinct. I don't know if it's, what do you think?
Well, it's mission creep. Central banks have done such a poor job at their primary mission because they can't do their primary mission. They've decided, well, we need to start looking at other ways. And it's fine. It's kind of funny that they've moved into these other, climate change is one that especially the European Central Bank has made a focus on, as their quantitative easing programs get repeated, and they can't really answer questions about it. It's sort of like, all right, people are kind of onto us about this QE business. We better come up with different ways to stay in business. Which is not what we want a central bank to do. They have a specific job.
And their mandates are being like torn to shreds because suddenly it's justified. Like this is basically against the whole principle of what they was, they're not supposed to do that sort of stuff.
And they don't, if there's anything that's really positive and good about the climate agenda, let the banking system, let the market find out what it is. Let prices dictate where they're supposed to go. Let the people who understand these things do it, not central bank. That's going in the exact wrong direction.
This is my counter theory on Bitcoin, is that everyone's like freaking out about its energy footprint. And I'm just wondering if as we suppress like the real market for green energy and because of all this sort of, guided hand, well, not guided hand, actually the opposite, sort of command economy stuff, Bitcoin becomes the only free market for real sort of clean energy innovation, because Bitcoin has a massive incentive to get cheaper energy, massive, and that the innovation in sort of clean energy is now coming from that area, because those guys, so they're the ones that are relocating servers to sources of like hydropower or. And I used to argue, well, it's displacement. That green energy could have been going to something more worthwhile. But you know what? I now think that it's like, why wasn't like a Barclays bank putting their servers in Iceland? Like, why? Clearly they could have done it. Why weren't they doing it? Why isn't So it starts a trend that is actually useful in some ways, and now everyone's going to Iceland. But so I'm just wondering if I was thinking about it wrong. And so I'm a bit more open-minded about Bitcoin these days. And NFTs, I find those interesting for you because my instinct is that they are kind of the euro-dollar market reborn. So cryptocurrencies was supposed to be the euro-dollar market reborn, but then they got regulated out. So they're no longer, like, crypto is no longer the euro-dollar innovation because it is, regulated to high HAL. So it's effectively, what was that regime that changed everything in euro-dollar markets in America? There was you should know. It made the interest rate arbitrage possible.
Regulation Q.
That was it. Regulation Q. Ooh, yeah. Moving on. No, I'm just joking. Anyway, so that has now effectively been that's happened to crypto because everyone. So if you want to get a crypto license, you have to abide by the same rules. So there's no advantage really. You're bound by the same bureaucracy and all the same sort of interest rate costs. So NFTs are now the new kind of Eurodollars trying to come back in there, is my view. So do you know what I mean? It's like this.
Yes, private money.
Private money,
yes.
but not on the blockchain, because the thing about Beeple, the big transaction that it never went through the blockchain. And this is, of course, art has always been like this. Art would get like dumped in warehouses in Geneva, and people would issue warehouse receipts against it. And that was like the tradable currency. And it was totally, you know, in the black market. You couldn't see who was settling what against. And it was just, so the float was funded by the art. And then the depository receipts were just used to settle payments between, you know, anonymously in the underworld, whatever.
Yeah, and I think that's where the crypto kind of gets it wrong. I think we want money to be more transparent, not less. And there's always going to be certain elements of the monetary system that have advantages in being in the shadows. And I would argue that's the commercial banking sector today, especially you think about things like repo collateral. They operate in the shadows and like the ability to anonymously repledge and rehypothecate and do all the things that they do. But I'm not sure that's good for the system and society. And I actually think that we should move beyond their needs and get back to what I think is more capitalist-like in realizing that capital is essentially not anonymous. It's a transparent system where everybody knows the rules and can figure out what everybody else is doing. So I think crypto kind of has the wrong idea in how it was begun. Certainly Bitcoin was the idea that we're gonna be the alternative to government money. We're gonna be private anonymous money. And I think that in making that decision, they sort of limited the usage or the usefulness of the technology. And so maybe in a couple generations further along, a much better blockchain type system where it's easy for everybody to see what everybody else is doing actually solves a lot of these problems. And I think it does create enough incentives and benefits that even those who would have a better business model working in the dark would realize that, you know, I think this other way of doing things is better.
Well, I mean, I know we're coming up to time, sorry, but it's just such an interesting conversation. I just want to know what you like, bounce this off you, whether it goes in the podcast or not. It's that, so I think you're right, but crypto has the problem in that transparency becomes hyper-transparency because of the blockchain.
Yeah.
And so it's a really, like, you want transparency, but you don't want that much transparency. Like, you don't want like a stalker to be able to figure out where you went for, like, you know, dinner yesterday and everyone's personal accounts being, yeah, that is a security risk in its own right? So there has to be a balance. And at the moment, you know, the banking system kind of comes up with this, like, you know, need to know situation, which is fair enough. Like, I think that's okay. And crypto has been absorbed into that system now. So all the advantages, all the sort of anonymity stuff, it's basically gone away because KYC applies to almost every single platform now. So the days when crypto was anonymous, it's just like...
Just so people know, KYC is Know Your Customer, which is a government-led effort to get banks to spot anomalies instead of waiting for bad things to happen, to become intrusive in their customer base and basically build up a database so that they can predict when people are doing bad things. It's not just about money laundering and drug deals and things like that, but all sorts of other things.
Yeah, and it's so like if you suddenly get like, or you were just like a student and then suddenly you're getting $1,000 in cash.
Yeah, exactly.
In your account every week, that's a red flag, and they will want to know where it comes from. And so, so that Bitcoin has been entirely absorbed into the transparent system. So that advantage is long gone. And I used to argue that, well, that just gives us, like, what's the point of Bitcoin then? And in fact, from my perspective, I find it more dangerous because there's so much transparency on the blockchain. But actually, what's happening is that the Coinbases and all those guys, they do most of their transactions off chain anyway. So there's a certain anonymity provided by that system. So if you bank with Coinbase, your transaction isn't going to be obviously on the blockchain necessarily, especially if you're doing transactions within that microcosm, right? So, so there's going to be layered privacy, I think. And then, but what Bitcoin does do, and this is going back to your point about capitalism, is that for capitalism to work, everyone has to be on a level playing field, and that's impossible when you've got competitive devaluation across the kind of financial system, because you have no shared anchor or shared, collective view of what value is. And I don't think Bitcoin is going to be the new payment system. I think we'll have layered like private systems that are quite centralized on top, but it could become a new form of collateral that at least anchors all the kind of competing systems to a singular, like, you know, I'm not obsessive about gold, but gold had its issues, but this at least anchors everyone to a similar value set. And maybe that's a good thing.
That's kind of where I'm going, is that blockchain forms the backbone of, you know, as you said, sort of like replicates the role of gold as money. That we have money and then we have currency at layered systems, right?
Exactly.
And when you get into the currency part of it, that's where you preserve anonymity on a very micro scale. But on the macro scale, we want full transparency. And I think we both agree exactly that. I think we're maybe saying it a little differently, but we agree that's what we want to see, is that we want to go back sort of like to replicate the gold-based system where it had, you know, non-fungible, transparent rules that everybody understood. You owned metal, therefore you had something of value of money. But we're not going to go back to a gold system. That's just never going to happen. I'm sorry, gold bugs. It's not going to happen. It's not in this digital age. And so if we can replicate the best aspects of that, where we have this collateral-based, blockchain-based monetary system, and then layer currency systems on top of it that are at least disciplined and are in some way linked in a very specific manner to the monetary blockchain part of it.
Well, they don't have to be the same. They could be, like, within a jurisdiction, they can be the same. But like, there's no reason why the American system has to be the same as the
Yeah, historically, there's never been a global currency. There's always been currency blocks, and I actually think competition is the way to go. I'd like to see multiple different systems in the U.S.
Yeah, so that's fundamentally what makes a currency is not just the currency, it's how you organize your economy and all that sort of stuff. So I see it as Bitcoin maybe being the anchor between all these competing systems, and that they can finally be measured on equal terms, which they can't at the moment because you had competitive devaluation by China for so long, right? How can you measure whether China's really adding value or whether it's just, you know, a transfer of wealth that doesn't grow the pie? Right. Because you can't, because what's been happening is that Chinese growth, like I compared China once to like Uber, because it's the same concept. Like it's just undercutting its way to it's grabbing market share through undercutting, right? And it had like the capacity to do that because it had a bunch of like really poor people it could exploit. And they had have you seen the documentary, by the way, American Factory?
No.
On Netflix. You should watch it. It's really good. It's about how like the Chinese come to America and open a factory, and they find that like they can't function in America because American workers are too lazy. and they're just horrific, and it's hilarious because they're like communists, but they won't let them start a trade union, so they're anti-union. And
they're more capitalists than the capitalists, right?
Yeah, it's brilliant. It was actually produced by Obama, but I really recommend it. Sorry, we've been yabbering on. No,
I think we need to wrap it up anyway, and I think that's probably a good place to start, because I think, you know, look, crypto is there's, I don't want to say the future, but crypto is part of the future, a big part of the future. And I think people need to get ready for the fact that they shouldn't fear this kind of stuff, because, you know, the way the system we have now isn't working. And if we realize that it's not working, that it needs to be replaced, we can start more easily accepting the fact that it not both it needs to be replaced, but also there are different possible solutions out there. And nobody should have the right to say this one will work and this one won't. I think we should let them decide, let them free into the marketplace, and we'll figure out which one's which.
The market will decide. And I think
competition and prices.
And I think there's definitely now, you know, I've done the biggest job ever scrutinizing Bitcoin, and I think I've come to the conclusion that, you know, there is a role for it, and it's not going to, you know, happen overnight, but I think institutional money will change everything. And my only, like, NFTs, the only point I was going to make is I think that's the market pulling back from that transparency. The NFT markets, like the big people transaction, didn't go on the blockchain, and that was intentional. I think that was like a marketing exercise for the underworld to sort of say, hey, we still have this capacity to mega, like $69 million, up to $69 million can be transacted, and there'll be no evidence of it on the blockchain, you know?
Yeah. I mean, there's always going to be crime and even just need for an anonymity. I can't say the word. There's going to be the need for anonymity. And again, on a personal level, we want to preserve that. But systemically, I think that we need to get people to realize that systemically, monetarily, that transparency is far more preferable.
We're agreed.
Yeah.
Thank you so much. I'm sorry you're going to have a troubling time editing all this.
No, this is
Not
wonderful.
at all.
We'll have 10 episodes now, so this is excellent. No. I'm exaggerating. I'm joking. No, for me, this is wonderful. I get to sit back and just listen, so I know the audience is going to love this as well. Izabella, thank you so much. Where can the audience find you? And include the work that you've been doing on Clubhouse lately. I think that's a new, interesting avenue for media communication. So tell us anything about that, plus the usual places.
We are on www.fd.com now, /Alphaville. You can read my tweets, and we have just started Clubhouse, which I think is a very promising platform. I like it because it's humanizing social media. It means you have to actually speak to people with human tone, and I think that might help cut through some of the horrific sort of, arguing that goes on Twitter, because I think that's a result of dehumanization. So I'm very optimistic about Clubhouse, although I'm a bit worried about whether or not the Chinese have too much data on it. But other than that, I think it's really good. So yeah, check us out. We've got a NFT chat. I don't know if it will be before or after Thursday this week at 9 p.m. UK time.
Thank you so much, Izabella. We really appreciate it. And I think it was a really good discussion about a lot of good topics. So,
well, drop by to our NFT chat. We'd love to hear from you on Clubhouse if you're on it. Yeah. I think you'd add you'd have some very interesting perspectives, I think.
Probably. Thank you very much.
Thank you.
Take care. And do please cut out anything that is libelous or makes me look stupid.
I don't think there was anything for either of those.
Yeah, nothing.
All right. Take care then.
Thank you.
It's a really fun chat. Thanks.
Thank you.
Bye.
Bye.